Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, you just spent a week in Vancouver attending 3 resource sector conferences. What was the mood like?
The mood, Jim, was surprisingly very positive. At the Metals Investor Forum on Friday and Saturday, where I gave my presentation on Saturday, we had full turnout. The audience where we spoke, it was full. Some standing room only. The presentation, by the way, that I gave, .com bubble deja vu for resource juniors again. That's now available. Just go to my website and click on the MIF presentation blog. It's 25 minutes. It covers my view of why this time is not the same as January 2000. That, in fact, the stage is being set for a very strong breakout in the resource sector. However, even though at the subsequent conference, Cambridge Resources conference, was about 300-400 exhibitors. I had a fantastic time walking through there, talking to people. Lots of great stories. I'll be introducing a whole raft of new bottom fish picks over the next while. But when you looked at the trading the day after the conference, it's still flat for the resource juniors. And in fact, I've got this great chart now which shows the average traded value of the resource listings on the TSX Venture and the non-resource listings. It's been flatlining around sort of 20 cents per share for the resource juniors. It's spiked up over $2 a share. Blockchain and weed mania is still raging. It's concentrated in a relatively small number of high-capped companies that are raising huge amounts of money through the brokerage firms who seem to not understand that decriminalizing marijuana is actually going to make the profitability of the marijuana trade shrink drastically. And of course, blockchain, there's lots of good reasons to believe that blockchain is transformational for the future, but in many ways, it's going to be a public good that's created or something that's actually saving money for operations. Consider the diamond sector. De Beers is going to develop a blockchain ledger to keep track of cut and polished diamonds, which have a chain of custody from the mine. When you laser scan a cut and polished diamond, it has a unique fingerprint. It's a collectible. They're going to put all the natural diamonds into this blockchain. They'll probably also put all the fake or synthetic diamonds into the blockchain so that the customers can distinguish between natural diamonds that have come from a conflict-free source from those which are synthetic diamonds cranked out in some factory a couple weeks ago. There's all kinds of things in blockchain, but the whole mania, the valuations we're seeing, it is true bubble. We're seeing little 2-cent resource companies all of a sudden announce they are evaluating the blockchain concept, and boom, they're up at 15, 20 cents. The stock exchange is still harassing juniors, which put out a press release with regard to a resource project, but they understand the IROC and so on that with this blockchain and weed, there is no fundamental reality. So nothing anybody says is untrue or can be demonstrated untrue. So we've got free reign for all these blockchain weed mutations to trade all over the place, while the resource juniors are still stuck in a trap. We had a bit of a break in the whole sort of blockchain weed mania a week ago, but in the last few days it has roared back, and it's trading over $500 million worth of stock per day on the venture exchange, compared to about $40 million for resource juniors, which are down there somewhere between 10 and 15%. So very strong mood, lots of positive attitude, but very little follow-through action by investors in the market. By the way, I'm offering a special deal where anybody can get for $100 US 30-day access to everything, including all these bottom fish picks I'm going to unveil over the next month, as well as all my Spec Value Hunter comments for picks like Scandium International until the rest of 2018.
John, Scandium International broke down this week on heavy selling after publishing news about a letter of intent with a German fabricator. Was the news bad, or are shareholders giving up to jump into the weed blockchain bubble?
The news was not bad. It just isn't what the shareholders of Scandium International are looking for. And yes, I do think we are seeing capitulation selling happening. What happened on Tuesday when the news came out that of a letter of intent with a private German company that fabricates parts using die casting was going to experiment with aluminum scandium master alloy provided by Scandium International to see if this can be blended in with aluminum copper alloys in the whole die casting arena. Somebody at Fidelity just had too much. They dumped 1 million shares over a 2-day period all the way down to 15 cents. We're not sure if it was a retail shareholder who simply gave up and figured it was dead money, go chase into blockchain or weed, or if it was an institution, somebody managing somebody else's money and didn't really care that they just had to sell it at basically a 20-30% discount from where the stock was stable in that sort of 20 to 23 cent. But it had the effect of causing a cascade of other longs to start selling. In the last 3 days, it's traded over 4 million shares. Who bought it? We don't know. If there are smart money investors accumulating the stock, that will be good. It'll have rotated out of nervous hands. If it was the traders at the various brokerage firms who picked it up, there's probably a 2-3 million share overhang at 20 cents as they clip it. This could be good for new investors unfamiliar for the story. They can go into this market and buy stock without disturbing it too much on the upside. And then the question is, like, what did this shareholder see in this news release that was so negative, or why in general did they capitulate? Well, the broader problem is one that I, in a sense, indirectly or maybe directly created earlier last year. The Evanson family, which had put up $2.5 million in June of 2014 to save Ningen from being foreclosed on by a debenture holder, they had subsequently converted it to a 20% interest in the project, which last October finally got converted into a 20% equity interest, making them the largest shareholder in the company. Scandium International has been challenged in the area of sort of market savvy, being able to contact institutions and high net worth investors directly. The board is a top-notch blue chip board, but they do not seem to have any connections with the financial sector, at least the one related to the resource sector. The hope had been, which I'd helped build up, that when the Evansons arrived, they would make all the difference in the world in terms of bringing new audiences, new eyeballs to this story, and that has not happened. So the stock is suffering this big letdown. Oh, we simply have another passive shareholder owning 60 million shares, waiting for management to come through with off-take agreements. And in fact, I suspect that a strategic decision was made rather than to try and raise $100 million, which is the next major milestone for the company, to begin construction of Ningen. They decided that let's continue with developing this off-take market, spend the next 3 to 6 months doing that, and when we've done all that, then we will go after the financing. And of course, the shareholders are wondering, well, what about all these others like Cleantech and Australian Mines, all these other companies with Scandium projects? The reality is none of these other projects have a mining lease for a standalone primary Scandium production scenario. They've all deviated into nickel cobalt components of their laterites, from which no meaningful scandium byproduct will ever be produced because of the way these flow sheets operate. And then there's questions of whether these nickel cobalt deposits will ever go into production. And as for the one in the United States, it's premised on $3,500 scandium oxide, which is way above what Scandium International plans to sell at, namely $2,000 per kilo. So there really is no competition. The company has some time on its side. And as for the news releases, in the past 2 weeks, they've been very subtle in terms of their implications, but very extraordinary in terms of future offtake agreement. A week ago, they announced a letter of intent with an Australian startup called AML Technologies, which is involved in 3D printing using aluminum scandium alloy. And of course, the immediate reaction of everybody was, well, big deal. Airbus already has the 3D aluminum magnesium scandium alloy called Scamalloy, and so what do we need another little startup for to start playing with it? But the hidden between the lines was this idea that this company has figured out how to use a rod, as a wire rod, as a feedstock for the 3D printer, which allows the 3D printing of much larger objects than is cost-effective and even feasible with the Scamalloy 3D powders. Those ones work great for printing small, intricate components, but the cost is high and the application is high, and the future offtake demand fairly limited from this. This new AML technology has the potential to expand future offtake demand for aluminum scandium master alloy dramatically by being able to 3D print much larger components. And the other one was with a private German company, Ohlmann Honor. It has about 650 employees, and if you know anything about Germany's welfare state, you know that this company probably is $100 million a year revenue company in order to support a staff that large. They have an international client base. They specialize in making components through die casting, and they use aluminum copper alloy, which is one of the series that George Putnam of Scandium International has always ignored. He's always focused on the obvious 5 series aluminum magnesium alloy, which Scandium makes a lot better. Now we have an example of this company, which had been experimenting with Scandium, doing a deal for Scandium International to supply them with a master alloy so that they can fine-tune using an aluminum copper scandium enhanced alloy in the die casting business, which is something that we weren't even considering. And in fact, what we're seeing with these news releases, which don't create any immediate offtake obligations, we're seeing all kinds of new applications being unveiled by Scandium International that represent future potential demand. So the market, that this Fidelity investor probably looked at this and said, well, none of this helps the company raise $100 million to put this into production, because what they want is an offtake agreement that's binding. Well, they're never going to get a binding take-or-pay offtake agreement because the company cannot guarantee that it will recover the scandium that the feasibility study says it will at the cost it will. So it can't guarantee delivery to the other party, so the other party won't guarantee taking the supply. So it's going to be, if there's any deal, it's going to be a softer one. Now, if the company spends the next 3 months unveiling a dozen of these different letters of intent with all these different groups, all of which they would be the master aluminum scandium alloy supplier once they're in production, some of these parties with already existing needs, and this would be entities like bicycle frame manufacturers, they're going to have to be scratching their head thinking, geez, by the time this is all done, all of the output will be spoken for. So the possibility is that this strategy will cause somebody to come out and do a relatively hard deal for something that they have an immediate use for, where they don't have to do any experimentation, and that would be the turning point for the company. Then the stock would have a slingshot effect and probably triple in price. That's when the doing the $100 million financing kicks in. And the other important thing is all these groups that they're doing these letters of intents with, all of them have backers who have a strategic reason to see primary scalable scandium supply come into existence. And so the stage is being set for the money to come from strategic investors that completely bypasses the Bay Street, Wall Street institutional market. So the stage is being set. Scandium International shareholders will have to be a lot more patient going forward. However, it could change overnight. And my advice to my subscribers has been to just relax and wait for this to unfold, and understand that these news releases are not trivial, meaningless news releases.
Discovery Watch will be right back after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with John Kaiser. John, Orion Resources put out results for last summer's drilling program at the Risti Gold Project in Finland. The stock price collapsed. Is the Risti project a Discovery Watch bust?
It is not a bust, but a discovery has not yet been confirmed. We've seen some other stories where stocks went up to $3-4, such as Nunadina, which when they reported the results, the assays for their big, long, visually wonderful intersection, and the results came out abysmally poor, that the stock collapsed from $3.50, $4 all the way down to 25 cents, where it now languishes. In this case, Orion, the story there had been a boulder field roughly 2.5 kilometers by 1.4 kilometers in Finland. They call this the Amarusko boulder trend, and these quartz boulders had assayed gold as high as 2,500 grams per ton, which is 80 ounce per ton, which is like $100,000 rock, and it averaged about 33 grams per ton, which is roughly 1 ounce per ton. So this is located in Finland, in a relatively new region where there aren't yet known to be these high-grade mesothermal veins such as we have in the Abitibi Greenstone Belt. So there was a lot of optimism that this year's drill program, and this is all blind, there's no outcrop, these boulders have been frost heaved and maybe transported short distances. So they did a 4,400 meter drill hole, 21 holes, average 200 meters per hole, angled holes to maximum vertical depth of about 300 meters, and the best that they came up with was 10 grams per ton gold over 1 meter. So this stock, which had been as high as $3.49 this year and raised a lot of money, it has $20 million in the treasury still, it collapsed all the way to 75 cents, and it's bounced back a bit. It's sort of in this 90 cents to $1 level. Now, they have not hit the source of these gold-enriched quartz boulders. They have to go back again and do a lot more drilling to figure out the structural controls. Obviously, when you have such high grades, you do not have them over substantial widths. They need to figure out the which exact veins host this gold. They've learned an awful lot from these 21 holes that they did drill. They will be going back again next year. It'll have to be a much bigger program. They have the treasury in place. So for Discovery watchers who simply watched it, this is now a very interesting pricing for a company that's got the money in place to go in there next year with a serious program. Last summer's program was in essence a scout drilling program on a blind target. These quartz, these high-grade gold quartz boulders came from somewhere in the vicinity, and they have just scratched the surface in terms of figuring out where the zones are that host this high-grade gold, and it is a large project. Once they figure this out, they'll be able to probably establish an entire district.
We'll have John Kaiser's final thoughts right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Kaiser. John, last week, Minera Gold put out results for its Alamos silver project in Mexico. The stock has doubled in price. Do we have a Discovery Watch winner?
Jim, the reason we started this whole Discovery Watch program over a year and a half ago was to just provide audiences with sort of like an overview of companies with exploration projects that have interesting potential. We have not had a lot of huge, or in fact any big discovery successes where you say, finally, we have a winner. In this case, Minera Gold is a Discovery Watch winner, which I suspect will have a lot further upside. They put out news late last week for the Alamos project, where they have had a 5,000-meter drill program going. This project is Peter McGaw's baby, and Peter McGaw put together the whole hypothesis for finding the Juanicipio vein for Mag Silver, which has taken that company from, whatever original 50 cents 12, 14 years ago, today being a $15 stock with mine development with its partner underway. Last September, I put together an overview of what Peter calls the piano key hypothesis. The Alamo project hosts the former Quintera mine, and this was a high-grade silver vein exposed at surface from which 200 million ounces had historically been mined. And much of the land had been all fragmented and different owners. Some had attempted exploration in the past, but until this was recently consolidated into a single land package that covered all the surrounding land from the Quintera vein, it was not possible to really test Peter's theory that adjacent to the veins that were mined, there is similar geology, but it has been downdropped, or you might say that where the Quintera vein is, it has been thrown up. But the veins that should be parallel veins would be deeper. At surface, they would not have any obvious mineralized trace that would have guided the old-timers to start digging away and mining this stuff. So this drill program, consisting of a series of angled holes, went in there. And in my write-up, which anybody out there, it's unrestricted, they can go track it down, go to kaiserresearch.com, click the Minera Gold profile and scroll down and get the September 8th. You'll get my overview. Now, Peter, when he was explaining this to me, said, if I can get several hundred grams per ton of silver within clearly a vein structure, I have proof of concept. There will be parallel veins like that. They have substantial strike. If their grade ends up being anything like it was with Quintera, based on the strike and the likely depth, we have a outcome potential of 200 to 500 million high-grade silver ounces. And the news that they put out was much better than simple geological proof of concept. The hole number 7 intersected 8 meters of 1,760 gram per ton silver. That's 57 ounces per ton, with good copper, lead, and zinc values also. And within that was an even higher grade 2-meter interval of 164 ounce per ton. So this is the projected Europa-Guadalupe vein, and that hole along the way also intersected another series of ore grade intervals, suggesting what Peter had also hypothesized, that there will be a series of blind parallel veins that could also become a future mining plan. So the stock that has a lot of paper out, 237 million fully diluted. It was sort of sitting at 25 cents. It has doubled to 50 cents. It's settling back a bit, but the stage is now set for an aggressive delineation drill program to demonstrate the vertical continuity of these grades and also along the strike of these veins, which are now confirmed. They are present. They have been down-dropped. And we have, I think, the first serious discovery with lots of running room demonstrated through a Discovery Watch.
John, thank you so much for the update.
You're welcome, Jim.
I've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Godwin.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.